All right, let's go. Let me see if the microphone is working. Is it working? Microphone, testing, testing. Yeah. Okay, now I'm live. I'm live. I can take these out of my ears. Put this in the charger. I love you, boy. I love you. I love you. Sorry you're so much in pain. Yeah, that's right. You're a good guy. All right, let's see. Let me put this up a little bit. Hey, you guys. Mark, Jeff, the one, Eddie, P-Man, Donna, Tim Casey. I don't expect a big audience, but I want to go over first. I want to go over this, but I'll look at questions and we can talk about anything else. But I want to go over this Andrew Left and Anson funds, how two crooks conned investors out of billions. And I'm sure you can't quite read that because I have a subpar computer. But I've got to go with what I have to work with for now. Otherwise, I'll never move forward. We'll never go forward. So I'm going to read this to you, stop and talk and pause and tell it from my side a little bit. And then I'll listen to your questions. Hey, Richie Rich, this has to be good, the one says. Good night. Good night. Sleep tight now. All right. Andrew Left and Anson funds, how two crooks conned investors out of billions. I'm going to take this clip off. Andrew Left was a big name in the short selling world for many years. Not too long ago, he was parading himself around as the white knight of the markets, gallantly exposing corporate fraud and serving as the champion of the retail investor. That's got to be the new Reagan slogan. The nine most scary words in the English language. I'm Andrew Left, and I'm here to help. Recent revelations, however, have shown him to be quite the opposite. A criminal. A con man who destroyed good companies for profit, conspiring with his business partner, Moez Kassam of Anson Funds. Moez Kassam. That guy sounds like he comes out of Kassam. What would that be? I don't know. Lebanon? Maybe Iraq? I don't know where Moez Kassam comes from. Anyway, in a recent interview with Bloomberg, Left portrayed himself as a broken man, living in fear of losing his freedom. Andrew, how karma swings its mighty swift 2x4 upside your head. This is what you've done to hundreds of thousands of investors. You're a broken man living in fear of losing your freedom. The problem for Andrew Left is that the DOJ and SEC already know he is guilty. We knew that all along, but I guess I'm so glad, by the way, that the DOJ is involved, because the SEC is a bunch of I don't know why they're even there. The DOJ and the SEC have everything they need to know to throw the book at him. In a recent CNBC interview in June, when probed by the interviewer about the DOJ investigation, Left, left. No, I made that up. Left responded that he wasn't able to comment. The speculation is that this typically means the person in question has cut a deal with regulators, turning evidence in return for their own immunity. I hope they don't give him immunity. He stole this thing. He's a broken man. Think of all the broken investors living in fear of losing their house, losing their spouse, losing their car. CEOs in towns losing their tax revenue. It's not so fun when it turns on you, Andrew Left. So the fact that he may be turning evidence may be the reason he was not mentioned when the SEC penalized Anson funds earlier this month. And as I recall, that penalty wasn't very big. And two, they never said which companies Anson funds destroyed. They never said who was in. Anyway, let's stick to what I'm reading. Everyone on the street knows that Left was the analyst involved in the two trades Anson was fined for. But as a cooperating witness, he has been left out of the limelight for now. This has other members of the Wolf Pack very nervous. With Mark Cahodes visiting Moez in Toronto, that's starting to sound like Lebanon, visiting Moez in Toronto some weeks ago to discuss how they can all move forward safely. To be accurate, he says move forwards safely. I don't think that's correct, but maybe it is. People should also understand how seriously the DOJ is taking this, as their California division is one of the most powerful and accomplished divisions within the Department of Justice. One of the reasons it is believed this was handed to them is because of the racketeering nature of what Anson Funds and its partners, such as Andrew Left, are doing. They behave like a mob. I love this guy. I love this guy. I love this guy. Anyway, it's the Toad. I don't know. I don't know who the name is of writing it. Maybe we'll find out as we go. They behave like a mob, and they engage in wire fraud, which, by the way, is a serious, serious charge. Money laundering, market manipulation, and Gary Gensler sits in front of Congress and says, "Oh, I don't know what's going on. I'm worried about Bitcoin, and we have the deepest markets, the most transparent, and the greatest capital formation markets in the world." Who is paying off Gary Gensler? Sorry, I didn't. Did I warn you I might editorialize? All right, they behave like a mob and they engage in wire fraud, money laundering, market manipulation, as well as a host of other crimes that potentially fall under RICOLA, the Racketeer Influenced and Corrupt Organizations Act. Citron Research and Muddy Waters might be the headline names, but Anson Funds is the head of the snake, Canada, and the main target. People need to understand that the Department of Justice, other than anything to do with Hillary Clinton or the Bidens, the Department of Justice has a 97% conviction rate, and anyone in their crosshairs is not getting away lightly. In this piece, we will look at a number of the transactions Andrew Left worked with Moez Kassam of Anson funds that the DOJ might not know about. We will detail how their partnership thrived and made both of them a great deal of money. And my guess is Kassam could be a customer of Philip Vellier at the Lynn Partners, because Philip Vellier is, to my memory, Canadian, and he might be from Toronto. But anyway, that's speculation on my part. It's just my opinion. Just know that the CEO of Vocal speaks very highly of the Lynn Partners, and he thinks that there's no evidence they did anything wrong, except his stock price is bloody well destroyed. But it's not Lynn Partners. We detail how their partnership thrived and made both of them a great deal of money. Both of them is Andrew Left and Moez Kassam. We also have voice recordings of Moez Kassam talking about his relationship with Andrew Left. All information we believe the Department of Justice has in its arsenal for this investigation. The following companies are covered where Left worked for Anson funds: Tilray, Milou, Tilra. Let me start again. It's my eyesight. Maybe I should wear my glasses. It's Tilray, and then Kronos, Cronos, and then Aphria, Aphra, and then in steps Genius Brands. I have my own opinion. About that drum major. But anyway, well, let's keep that opinion off the table right now. Okay, now they go on. They also have Moez Kassam's voice recordings. Okay. Dirty partnership. Moez Kassam has been doing business with Andrew Left for years, with Left tipping off Moez before the release of any reports. That is fraud. That's market manipulation. That violates Reg FD. Gary Gensler doesn't care. Gary Gensler does not care. Is that because he's stupid or paid off? Complicit or corrupt? Does he want his daughters to know that he's ignorant and not a very bright man? Or does he want his daughters to know that he's taking payoffs? Which is it? And a lot of the payoffs are above board, so he can feel good about them. But hey, each of us knows in our heart if what we're doing is right or wrong. Just because you can hire an expensive lawyer to tell you it's okay doesn't mean it's okay. Moez Kassam has been doing business with Andrew Left for years, with Left tipping off Moez before the release of any reports, both positive and negative. That is as illegal as it comes. Sources on Bay Street have told us that Anson used to run money for Left and that they also had a balance sheet arrangement, though we have not been able to independently confirm this with documented evidence. I can surmise what a balance sheet arrangement is, but I'm not crooked enough to understand what two crooks mean by that. Maybe he'll explain it. As our investigation continues, we have been fortunate enough to have developed a former Anson Fund source who maintains insider access to vet and confirm intelligence. The new information below on Tilray comes from this source. How insider Tilray trading came to haunt Moez, and Gary Gensler doesn't care about it. Adina Friedman doesn't care about it. Robert Cook doesn't care about it. Your broker-dealer doesn't care about it. Chuck E. Cheese Cromwell doesn't care about it. Ann Wagner doesn't care about it. Nobody cares. But maybe the DOJ finally, and whoever this excellent journalist is. Moez was an original investor in Tilray. Now they come in with money, a little bit of money, but then they destroy it and they make many multiples. Let's see what else he says. Moez was an original investor in Tilray. He got the second largest allocation when the stock went public. Undeniably, it was a good call. The stock started trading on July 19, 2018. Less than a month later, on the afternoon of August 15, Andrew Left published a positive report on Tilray. They leave a link for it, but let's move on. This is a long read, so I'm not going to look it up. The headline was, Tilray next in line in a budding cannabis industry. Left has since scrubbed this report from his website in an attempt to remove any proof of his illegal insider trading. Gary Gensler doesn't care. Fortunately for readers and regulators, the Wayback Machine captured the report. I have to look up this Wayback Machine, which you can read here. Immediately after Left published his Tilray report, the market jumped on it. By early afternoon, MarketWatch reported that the stock was up 21% because of Left's report and his large following. His large ass. And they link it to a MarketWatch story. The Tilray chart tells its own story. They link it to a chart, so you can look up the chart. The symbol is T as in Tom, L as in Larry, R as in Robert, Y as in yellow. TLRY. I'm not making a recommendation. I'm just reading this. A recommendation for educational purposes, don't you know? I'm not making it. The casual observer does not know, however, is that Left tipped off Moez hours before the report came out. Moez bought 150,000 shares of Tilray in the market just hours before the report went live. This is a clear violation of insider trading rules. The SEC doesn't care. Does not care. Does not care. Because I'm sure the Kassam funds, the Anson funds, are good clients. Let's call Left's call, sorry, Left's. If I read too quickly to the right, this eye is no longer focused. I mean, this eye is no longer focused on the word. This eye is, and it gets blurry. So let me start that over again. Left's call and Moez's purchase of Tilray stock happened at the low point for the stock and just before it started its huge run. Anson made an illegal profit, that's Moez, Kassam, illegal profit over this inside information. And of course, the broker-dealers, the prime brokers trading the stock, and then the hedge funds all made money on this as well. All of it's tainted. All of it's tainted. Gary Gensler doesn't care. Ann Wagner doesn't care. Adina Friedman doesn't care. Chuck E. Cheese Cromwell doesn't care. Robert Cook does not care. Anson made an illegal profit off this inside information, and not for the first time. This is a relatively easy one for the regulators, who do not care. That's my my input. You need to look at Anson Fund's trading records in Tilray and see where and when they purchased Tilray shares on the 15th of August, 2018. Blue sheets? Oh, we can't find those. And Wagner, consolidated audit trail of tickets? Oh, you want to protect the privacy of Anson funds. It's a privacy issue, Ann Wagner. You should be ashamed of yourself, Ann Wagner. Absolutely ashamed. You taint the office you sit in with this kind of smell of corruption. The purchase volume was rumored to be somewhat north of 150,000 shares, and the trade will have taken place a few hours before the report came out. The SEC's not curious. The single least curious person in the world, Adina Friedman, she could care less. You've heard that before from me. But the story gets much better or worse for Moez, depending on how you look at it. Tilray then started flying higher and higher. Now, we don't know when Moez decided to sell his position. Ann Wagner, Annie, show me state. But it is believed to be in the $40 to $50 range. However, he not only sold the 130,000 shares he recently bought off of Left's, I don't know why those two numbers are different, but anyway, it says 130K here and 150K up there, that he recently bought off Left's illegal tip-off. But he got greedy and went naked the stock in a huge way. He shorted north of 1.5 million shares. Ann Wagner, consolidated audit trail, Gary Gensler, settlement, broker dealers, ask for receipt, prime brokers, you should be out of business. Adina Friedman, cash your $2.5 million a month. You're breaking way for women. Man, you're great. Moez was convinced the stock was going to fall, but it didn't. It kept climbing. To get out of this situation, Moez Kassam then apparently approached the CEO of Tilray. See how the CEOs get involved? And tried to persuade him to do a capital raise. He said, quote, "You're never going to see this price again. I'll be the lead buyer in your round. See how shorts cover? They cross, they do it through fronts. I'll be the lead buyer in your round. You can put me in for a big number and let's get this going. The price is so inflated here." So he would cross it and then he would sell more. All right. The Tilray short knew that Moez was short, so he told him no. Moez Kassam made money on the way up, but at this point, he was also attempting to make big money on the way down. We have heard from various sources that Moez believed he could net a $10 million profit from this short trade. Gary Gensler doesn't care. Are you going to start voting for people that care? Not you. I'm not talking to any specific one of you. All of us. We've got to put this on the front of their requirement. The problem is we're diffuse. An investment fund is one source of cheating, one source of money. We're spread out all over 2 continents or more, and we don't have the power. Maybe we need a lobby. Things started to spiral out of control for Moez Kassam, who now had to contend with the CEO of Tilray, who was onto his game and not willing to play ball. The stock rallied further, jumping from $100 to $160 in a day. So he's hurting at this point. This became an existential crisis for the firm, Anson Funds, and one they only barely survived. Regulators should be speaking to their bankers about how they actually managed to pull this off. Regulators don't care. Regulators don't care. A good starting point would be determining who had the borrow. Here's an idea, Ann Wagner. Audited, consolidated, audited trail. Audited trail. Transparency, Ann Wagner. Hey, Gary Gensler, blue sheets, transparency. Hey, Adina Friedman, give a shit. Okay, so a good starting point would be determining who had the borrow. Here's a tip. No one did. No one had the borrow. Not Anson, not the banks. They sold the stock without locating it, without borrowing it, without owning it. And the broker-dealers / prime brokers never asked for a receipt. This doesn't bother Gary Gensler. That didn't scare little Bill, did it? All right, now there's Aphria, the full shocking story. Moez Kassam's modus operandi is inflicting severe damage upon cannabis company Aphria with the help of Nate Anderson at Hindenburg Research. We've published information on this before. Anson's staff put together the majority of the short report / hit piece on Aphria that Kassam had obtained from his close relationship with Aphria management. They smile at you, they stick the knife in your back. And I wish the CEO of Collective Audience recognized this. I think he's a good man, but they're liars. They lied to your face. They're just smiling faces sometime. Passing that information along to Nate Anderson. So Kassam had obtained information from his relationship with management, and he passed it along to Nate Anderson at Hindenburg Research. Nate claimed credit for the research. It also needs to be noted that Anderson was paid for his work, but failed to disclose this in his report. Prior to the release of the report, Anson sold its position and took a large naked short. When the stock went too far the other way, they employed the help of Andrew Left to help pump the stock back up again. We believe that a thorough investigation of Anson's various funds, LPs, and off-book structures would turn up the necessary hard evidence of this paper trail. I'm sure Gensler's right on it. Most likely, DOJ investigators are already combing through this as part of their forensic sweep. I hope so. I hope the DOJ is less different than Gary Gensler, who's just a stooge. Gary Gensler is a stooge for Goldman Sachs prime brokerage. I hope the DOJ, down below the corrupt part, bought out by Hillary Clinton's money, is better. I hope. I'm sure it is. I know people, friends of mine. But the story of Moez Kassam and Aphria is much bigger than people know. For years, Moez had been getting close to Aphria management. trying to insert himself into their inner circle in order to obtain inside information. They smile at you, they lie to you, and then they cheat you. Trying to obtain inside information which could be used to his advantage. We believe Aphria's managers were unwitting pawns in this plan, possibly. But you got to ask yourself, how hard is it for a CEO to study the note he or she is signing? How many times do you have to ignore your lying eyes before you're complicit? I don't know. I'm not as generous to the CEOs because the CEOs have a conflict of interest. They start separating the shareholders' interest from the company's interest. Well, the company is how they make their retirement, their health insurance, their trips, their wives, their girlfriends, their children, the schools, their lifestyle. Once you separate the company's interests from shareholders' interests, you're no longer doing your job according to securities law. This interrelationship burgeoned when he learned on 10 October 2018 that Altria was close to investing 1.8 billion into Aphria, valuing the company north of $26 a share. The chart below shows the sudden reversal in Aphria's share price and the increase in volume. However, it's necessary to look at the options markets. Anson always loves to leverage up to the max when trading on insider information. And this time the fund purchased a large amount of call options to maximize their gains from the deal. There's the chart. Here's the increase in volume, and there's the stock price starting to go up. If you look at Aphria historical option trading, which the SEC would not take the time to do, there was a big jump in contracts traded on October 10, 2018. 13,572 contracts traded. Remember that Bill Clinton made derivatives exempt from regulation. I did not have sex with that woman, Miss Lewinsky. The average for the previous month was 3,000. So on one day, they traded 13,572 contracts. The average was 3,000 for a month. Doesn't bother the options exchange, doesn't bother the SEC, doesn't bother Ann Wagner. Then in mid-October, Anson learned that the deal with Altria had fallen apart, attributable to some missteps on the part of Aphria management, and Kronos was to win the deal. Kassam was reportedly furious until he saw a great opportunity to make even more money. Thus, the plan to attack the company was born. Moez started selling the stock that Anson held in Aphria on the market. But he was also going naked, as he knew the report was coming soon, and there was little risk to him. Anson also loaded up on put options. That's a way of playing the downside. We believe the below contract purchases are Anson funds alongside other large option trades on the days running up to the publication of the Hindenburg Anson hit piece. 2,836 contracts on one trade, 2,127 on another. SEC doesn't care. Doesn't care. Up until this time, there had been very few out of the money put option purchases in the options market. Doesn't say the price here, so I don't know what the strike price was. This was how Anson was to maximize its gains on inside information it had and outright market manipulation and collusion. And it's incredible. It had on the Aphria deal. This combined with the huge, back when these kind of trading desks were inside the broker dealers, there was a Chinese wall, but there was also compliance officers. When the big broker dealers became banks, they kicked all that risk out of their shop. So those desks became hedge funds. But those hedge funds became clients of the broker dealers' prime brokerage arm. So they got the best of all worlds. They got the stock loan on their retail broker dealer side. They can just do plain vanilla. They never took risks, no lawsuits. On their prime brokerage side, they could get the trading commissions. They could do the leverage, and so therefore they could get the margin interest. They could charge fees for maintaining the accounts. They could charge for research. They could charge for almost anything, but they could charge for stock loan. And as soon as they start loaning stock that doesn't exist, it's almost an infinite amount of money they can make on one small real position they have. The brokerage community is in on it. Now, I'm not talking about if you talk to your broker, they don't know about it. Goldman Sachs controls Gary Gensler. Goldman Sachs prime brokerage, 85% of their revenue comes from this crap. 76% of their profit comes from it. It cost Pat Byrne $30 million to find that ratio out. But Gary Gensler doesn't care. All right, so by buying these put options, this was how Anson was to maximize its gains on the inside information it had on the Aphria deal. This, combined with the huge short and distort campaign it planned with Hindenburg and Quintessential, it made them confident that the stock was going to fall hard. As we have detailed previously, on the morning the Hindenburg report was released, Moez Kassam was calling all the banks, brokerages, and everyone with a serious position to tell them the stock would never open again, as it was under investigation by the fraud squad and a host of other lies that he knew could cause serious damage. Now, the boo birds come on here and they try to do the same thing. But this is massive manipulation in the market. There's no price discovery anymore. It's all fraud. And the cop on the beat is a mouse. The Anson network also hit the forums and chat rooms hard. They hire the boo birds. They hire them. The Anson network also, the network, the people you listen to sometimes on Twitter, and the people that come on here. The Anson network also hit the forums and chat rooms hard in a coordinated effort with various groups to take Aphria down. This effort also resulted in Quintessential Capital Management founder Gabriel Grego. Italian? Spanish? I'll go with Italian. Gabriel Grego, working alongside Anson, calling Aphria stock quote unquote worthless. We believe that a DOJ investigation into Grego's communications with representatives of the Anson Funds network would demonstrate this connection. I hope the SEC is watching my video, and I hope FINRA is watching it, and I hope someone from Adina Friedman's office is watching it. This is your game plan. Do an investigation. Put an intern on this. Hire someone from George Washington University Business School or Georgetown. Go down to the Mason School of Business at William and Mary and get somebody. They'll do it for free. They're smarter than any. They're smarter than Gary Gensler any day of the week. Any day of the week, and they're certainly smarter than Adina Friedman. And I would hazard a bet they're really smarter than Robert Cook, who looks like a lump on a log. At the same time, class action lawsuits against Aphria were launched upon Anson's initiation because he wants to crush the stock price. They do it from all angles. And this is what these little guys try to do to these stocks we're in. Doesn't mean you have to stay in the stocks, by the way. I'm not saying the way to fight is to diamond hand the stocks. We've got to learn to hit and run and put tire tracks all over their back, and then we can have our fun. Okay, so what is the Andrew Left con? The next steps in Moez Kassam's operation against Aphria, however, would land Anson funds directly within the sights of an ongoing racketeering investigation in the United States. When Aphria stock plunged, Moez Kassam saw an additional opportunity to gain from the upside precisely because the stock had dropped lower than he had planned. To ensure additional gains on this scheme, Moez Kassam contacted someone close to the company with his own offer. His offer was sinister and posed a lucrative question. Quote, what would happen if the biggest short seller in the world became a long buyer of Aphria, unquote. The answer was just as lucrative. The stock would go up. To make this happen, Moez Kassam paid Andrew Left of Citron Research to get in touch with Aphria management and initiate positive coverage on the stock. Now, this is the criminal working both sides of this game. I really think when CEOs are always on the defensive, I don't believe that the SEC should hold CEOs in the same criminal light as a guy like Moez Kassam when the CEOs go on offense. If the SEC's not going to do its job, CEOs, honest ones, are left to try to do the job on their own. Gary Gensler's worth almost $150 million, and his entire career is a payoff. So he paid Andrew Left of Citron Research to get in touch with Aphria management and initiate positive coverage on the stock. On 7 December 2018, a day which will live in infamy, Left wrote the following tweet. Congrats to $CRON. A floor has been established. Time to rethink all valuations. APHA is compelling on all metrics. CDN footprint is too large to ignore. Canadian. Look past the noise. Stock should see $10 US. More details to come. And Gary Gensler could care less. He ignores the over-the-counter markets. So does the OTC markets. So does the NASDAQ. So does FINRA. The tweet sent Aphria stock soaring, as noted by capital markets follower Benjamin Smith. And by the way, if you don't think guys like, well, I won't say his name, but people that play GME aren't part of this kind of schemer. So anyway, the tweet from capital markets follower Benjamin Smith. Wow, at Citron Research moved $APHA up 9.37% in seconds. Following that tweet, Left released his report just a week later on December 18. Over the course of the next month, the stock moved up with the help of the Anson's fine-tuned promotional machine. During this time, Moez sent the following messages to various people in management and large investors in Aphria. My boy Andrew Left to the rescue, unquote. Quote, see, I told you, I'm your biggest supporter. I've hired Citron to pump this stock. Watch it go. He was bragging to everyone that Left was working for him and he was saving their asses. It was his words. During this time, those who are familiar with Left and his focus on short report writing began to wonder why he suddenly shifted to long reports. That led to initial speculation that he was working directly for Moez Kassam and Anson Funds. That speculation has since been confirmed with a DOJ investigation and the recent SEC fines of Anson Funds. The inclusion of Andrew Left in the Aphria deal led to a falling out between Moez Kassam and Nate Anderson. Oh, they were such good friends. The money shifted to Left, and Moez Kassam failed to fully pay Nate Anderson for his initial work on the short aspect of the schemer. Anson's purchase of Aphria founder stock that was not disclosed to the market. This just in from our insider at Anson Funds, who managed to obtain email evidence. I hope that person doesn't commit arkancide. Quote, shortly after Aphria went public, the stock was trading in the $2 to $3 range, and it is believed that Moez promised he would be able to help the company raise money with a financing because he shorted on the other side, but he needed to be taken care of before he did. So it was arranged for him to buy. It was arranged for him to be able to buy 100,000 founder shares in the company at a price of 10 cents per share. This transaction took place over 4 months, from September to December 2015. Well, Gensler wasn't there, but Adina, bless her heart, was at NASDAQ. The purchase was made by Anson Investments Master Fund. The Anson Investments master fund. The transfer agent was Computer Share. Now, Computer Share is out of Canada, and they make it very difficult to get stock electronically trading if you have physical shares. And I think they're part of the whole thing. I think one of the things the SEC, one of the changes that needs to be made is that people should be able to move from physical to electronic for free or a marginal price, 30 bucks. Sonny Puri was heavily involved in this alongside Moez. So if regulars want to speak with someone else in Anson funds, why would regulars want to pursue this? I mean, under the Kamala Harris presidency, Gary Gensler can be the Secretary of Treasury with a word from Kamala's paymasters at Goldman Sachs. Sonny Puri was heavily involved in this alongside Moez. So if the regulators want to speak with someone else in Anson funds, then Sonny is your man. And don't think about deleting the mails. It's too late for that. We already have copies. But hey, why would the regulators care about this? These are good clients. They're good clients on Wall Street. There's systems in place. I hear that so much. There are no systems in place, just sissies. There's sissies in place. Anson involved the fleecing of Aphria investors by selling worthless assets. Many of you may already be aware of the class action lawsuit against Aphria by Scott and Scott toilet paper. Oh no, Scott and Scott law firm. My apologies, Scott and Scott. We have been told they were sent most of their information by Anson funds. Oh, it is Scott and Scott toilet paper. The main thrust of the lawsuit is that Aphria overpaid for worthless assets. So they hired lawyers to go after the CEO. That's what the SEC does. They're all in it together. What isn't known is that Anson Funds was a major holder of one of these assets and made a huge amount of money off the sale. It's so corrupt. We know from sources within Anson, and this is in 2015. Where was the SEC? Where was NASDAQ markets, Adina? Where was FINRA, Robert? Where was OT Markets, Cromwell? Ann Wagner, where's your oversight committee? Allowing for transparency, audited trails of these trades. Well, that's right. You got to protect their privacy. Yeah, right. Got to protect your payoff purse. Everything I say on here, I think I've said it already. From start to finish is editorial. It's in my opinion. It's in my best judgment. And I think the evidence is there, but it's in my judgment. We know from sources within Anson that they participated in early stage financings in at least one of 3 Latin American assets that were ultimately purchased by Aphria. Anson owned 22% of Colcana, the Colombian asset, and a major part of the class action lawsuit. Anson funds made a fortune here, whilst other investors lost out. Regulators should be looking closely here. I'm going to hold my breath. I can't hold it for the regulators. But I'm sure they've come on to listen to these calls and the boo birds come on. Oh, it's pump and dump. This is the strategy to destroy US markets. I'm afraid the markets have to collapse. And one of the reasons that I'm probably going to start talking about commodities a lot more is I think we fought the good fight and we're running out of time. But it's going to come a point that only real assets survive, only real things. Imagine what's going on in the beams of our stock market. They've got to be riddled with termites that have mated, flown, eaten through every supporting beam in the United States market, while Gary Gensler and Adina Friedman get the penthouse suites in the same structures. It's all going to come falling down. They'll have their money. They'll get away free. And then the shorts will say, see, we told you the stocks were going to go down. It's easy to predict something that you have a hand in destroying. It's not a prediction. It's a bragging, as they said in here. Okay, naked short selling Aphria. On the 28th of June, 2018, Aphria announced the closing of a bought deal financing for $258 million. That's a lot of squid. Our sources believe that Anson wrote a check for $50 million into this deal, which I'm sure is proceeds from short selling. This is a move, illegal short selling. This is a move Anson funds would not make without downside cover, which was achieved through selling stock they did not own. It's all here. It's all here. If there's a lawyer at Gibson Dunn that wants to be honest, I know you work for the SEC, it's all here. Just go down the hall to the lawyer, your partner, who's representing Lynn Partners and representing the Power Up Lending guys. All the data's there, Gibson Dunn. Are you allowed to get fees from tainted fruit, from the fruit of a poison tree? I guess you are. You went to law school. And you dated Buffy when no other guy could get her. You must be special. So our sources believe that Anson wrote a check for $50 million into this deal. This is a move Anson funds would not make without downside cover, which was achieved through selling stock they did not own. This is the definition of, quote, naked short selling, unquote, and is also called, quote, front running, quote, a placement. Paren, private placements can be shorted before in Canada, but not short form prospectuses or free trading finances on paren. That's not well written, but when I was overseas and when I was a big swinging, here for a while, I did learn that offshore accounts under the safe harbor of Reg D or H or G, there's a safe harbor, they would sell short into a placement, an IPO or a secondary, and then put in for an allocation of the newly issued stock, and they just cross it immediately. And the brokers who had that business, I wasn't one of them, but there were guys in my office that did have it. They just printed commission unbelievably. I had real accounts, but it was all done by DVP. Anyway, they would do it all across the street. and it was allowed. It wasn't a big percentage of any allocation, and best of my knowledge, it didn't go beyond selling your allocation before you got your allocation, because they could the stock would be in a secondary. Let's say the stock's trading at $32, and they announce a secondary, and it gets done quickly. They make the phone calls, institutional brokers. The stock might trade down to $28, and they price it at 28. Well, the guys from offshore can start shorting it from 32 down to 28. That ends up, if I'm doing my arithmetic correctly, that ends up being a cheaper financing for the company than going through a full-on investment banking deal. And it gets them a slug of money all at once. The company trades down to 28, the deal gets placed, and then it sometimes fluctuates. But the investment banker has to, back then anyway, had to maintain a stable market for a while. So the other thing the offshore accounts would do is buy into the stock. If the stock traded below 28, they buy into it because they knew Morgan Stanley or Alex Brown had to come in with buying. It's usually a green shoe, it's an over allocation. So they sold more shares than were there, and some of it goes to the company. It's a murky world that I only observed. I never was on the inside, but there's money there to buy the stock back up to stabilize the market, and then it goes back to 32 over the next 4, 5, 6 trading days, and the offshore funds make money on both sides. It's a huge just giveaway of money to big pools of funds. It's just huge, and that's why Gary Gensler doesn't crack down on it, because Goldman Sachs makes their money that way, and so does he. A thorough examination of Anson's positions, and Wagner, an audit trail would do that, and trading up to 6 weeks prior to this financing, and then through their long list of structures, would provide the authorities with evidence they need to demonstrate naked short selling. They don't care. And Wagner, and shorting ahead of a bought deal. Where investigators need to look, if they care to. There is a clear pattern to Anson's modus operandi, and Aphria is the textbook example, but there are dozens more. In order to shore up additional evidence of Anson's funds orchestration of the Aphria manipulations, our sources suggest that the DOJ looks into the trading and holding paper trail left by Andrew Left 6 weeks prior to the Hindenburg report release. They should also look at Left's companies and offshore structures to examine any short positions at that time. Finally, the DOJ should look at any covering and buying activity that took place 4 weeks after the Hindenburg report release. This is where investigators will see if he covered and bought more before his own long report was released. This same investigated procedure must be followed with all Anson structures, LLPs, whatever. For all, the paper trail should be examined for positions in Aphria, I meant LLC, sorry. In Aphria prior to the Hindenburg report. Following the downside and prior to the Andrew Left report, following the upside. That will provide the clearest evidence of market manipulation. Do I have to say it anymore? I'll stop saying it. It's all out there. I'm telling you, an intern from a business school or a first-year law student could figure this out, but not someone graduated from Goldman Sachs and the chairman of the Hillary Clinton campaign. He can't figure it out because he's a moron or he's been bought out. As a result of the DOJ investigation, which has significantly raised fears and upped the ante in the short selling world, more people have been willing to come forward to work with authorities on the Aphria fraud investigation. This is a great start, but it also represents only one of dozens of cases of manipulation by Anson funds. I bet it's hundreds. Okay, here comes the greatest drum major in the history of short selling. This is my billion-dollar fight against the short sellers. My name is Roger Rabbit, drum major, whatever his name was. 3 first names. I have a British accent. I dye my hair. I can talk a good game, and I can come in and take money out of the market and then do a deal with the shorts, even though I claim to be in the fight against the shorts. And even though people that I know told him not to do it, he did it. And then he raises a bunch of money, and now he's a victim. Color me not believing it. I don't believe for a minute that Roger Rabbit, the man with 3 first names, and the drum major that came in here hogging the glory, came on space calls, came in to take your attention, raise money. For the life of me, I think he was in on it. And I say that with my best judgment and in my opinion. And if he wasn't, why don't you return all the money to the investors that ponied up for your deal to set your life in the rarefied air of international travel, golf clubs, pricey schools, and prestige? Why don't you think about your investors? But anyway, let's find out what it says here. Genius Brands and the Fraud of the Year. Now he's going to blame Anson. You can hear from my tone of voice, I think the CEO was in on it. He said he was here fighting shorts. So again, he either knew what he was talking about or he was misrepresenting himself. As far as I'm concerned, he's a big cheerleader, as dumb as the stereotypical image of a cheerleader. And he's a drum major for the shorts. It's pretty strong words, but that's how I feel about it. His name is in the public venue. He calls attention to himself, so I can have an opinion on him. That's my opinion of Robert Jameson Johnson, CEO of Genius Brands, whatever the hell his name is. Genius Brands was a huge trade for Anson, and it's rumored they made north of $100 million off the back of fraud and manipulation they pulled off there. The drum major didn't know about it. He was just fighting the shorts. He couldn't read the contracts he signed. Come on. It barely passes the smell test. All right, let's just keep reading, and I'll try not to interrupt the reading. Genius Brands was a huge trade for Anson, and it's rumored they made north of $100 million off the back of the fraud and manipulation they pulled off here. But Anson didn't operate alone. Both Andrew Left of Citron Research, alongside Nate Anderson of Hinberg Research, members of the Wolf Pack, also helped Moaz pull off this heist on investors and the company. I've already told you where I feel about the CEO of the company. And it's not the first time I've expressed that opinion. I've felt that way from the start of his glory. His narcissistical, sociopathical glory. That's my opinion. That's my judgment. But before we get into the pump and deliberate dump Anson pulled off, we need to understand why and how Anson positioned themselves to actually make $100 million. The pump. Doesn't this sound just like what I always say? The pump and the dump is caused by the pretenders. Let's hear the pump. The recent Augenbaum-Reese lawsuit sheds a lot of light on how Anson managed to position themselves for the trade, and also how they burrow into companies, making friends with management they always knew they were going to betray. That's one read on it that Roger Rabbit didn't know. But Roger Rabbit came out, it's my billion-dollar fight against the shorts. Who did he hire to help him? A bunch of twits? It's amazing that no one has written about how the stock, this is Genius Brands, went from 23 cents in April 2020 to $6. I remember I used to do videos over there. He came into the space calls and he put out YouTube, and you all, a lot of you all, moved money into his stock. I think the CEO bears a responsibility himself. So the stock went from 23 cents in April 2020 to $6 on the 5th of June 2020. Anson is very good at pumping stocks higher as well as destroying them. According to the lawsuit, on March 17, 2020, Anson funds purchased senior secured convertible notes issued by Genius Brands. Who wrote that document? The billion-dollar fighter of the shorts signed that document? Listen to me. Senior secured convertible notes are toxic, death spiral, dilution notes, and he signed it. He put out to you that he was fighting this battle, the shorts, and then he signed that deal anyway. Again, he's either a twit or he was in on it. Maybe he was naive. I don't know many billion-dollar knights in shining armor that are naive. Maybe Arthur, when he lost Guinevere. Anson funds purchased senior secured convertible notes issued by Genius Brands and warrants to purchase substantial additional shares of stock. Anson bought these at 21 cents a share. Now, because the size of the transaction and the large number of shares acquired, Anson became an affiliate of the company. As an affiliate, Anson is not allowed to sell the stock for a period of 6 months. They violate that too. On June 11, Anson reported it owned 9.9% of the company's stock. That's genius. Roger Rabbit's company. But between May to September, we believe Anson sold most of its position via short sales. These guys are smart. That's exactly right. Pledging their locked up stock as collateral. That's illegal. But they do it all the time. Oh, here it says, parenthesis, yes, we know that is illegal and that banks and brokers wouldn't allow that, but they do, close paren. All the brokerages care about is the commission dollars, and Anson pays a lot, so they get away with fraud. There are dozens of documented SEC cases every year where brokerages get fined for just this exact sort of behavior on paren. But it's so small. And then the SEC complains they don't have enough money. Did you just hear this? This one deal, they estimate may have made how Anson positioned themselves to actually make $100 million. You don't think there was a kickback to the CEO? You got to at least consider that there might have been. Particularly when people are international. It is believed Anson sold this stock for over $2 per share and possibly much higher. So Anson got into Genius Brands, led by the billion-dollar short. The short fight is my fight. 23 cents they bought it, and they sold it for more than $2. Can you imagine making 10x when you control the fraud? And possibly much higher. We would be interested in knowing how many shares of Genius Brands the Genius CEO sold to Anson Funds on July 30, 2020, and what Anson's trading was from March to July across all of its funds. Regulators should be asking for this information. Sounds like this guy still believes in the system. The Augenbaum lawsuit might also help us get this information if it becomes public record. Background: how Moez Kassam and Anson Fund defrauded GNUS investors. Finally, a headline I can agree with. Moez Kassam, Anson Funds defrauded GNUS investors. The question is, they always, as Norm Macdonald says, they always question the priest, but no one asks the vicar, or he said the something like that. But no one goes asks whether the CEO in this case was part of it. Don't put yourself out as an expert and say that you're going to do things and then come and plead victimhood. Either be a man. You're an expert, and then you got in this trap. Disgorge the money you raised. Give it back to your shareholders and go back to pretending to be somebody important. You can tell that guy makes me upset. Okay, so how they defrauded GNUS investors. Anson Funds was the driving force behind the manipulative long-short campaign for entertainment company Genius Brands. who had either an idiot running the company, belying the name genius, or had a strategic genius that knew exactly what he was doing. Okay, a strategic plan was initiated by Anson funds to make the stock price adhere to their long short rule of, quote, elevator up, stairs down, unquote, with addition of a safety net. Oh, that's interesting. I actually think stocks tend to go up the stairs on the way up, and then they go down the shaft and fall more quickly than they go up. But anyway, so their short rule, their long short rule at Anson Funds apparently is elevator up, stairs down, with the addition of a safety net, which is the dilutive, destructive, death spiral convertible note. They would do all of this while giving GNUS and regulators the impression that they were long the stock. You know what? The regulators aren't even looking. They don't care. They're not looking. They really don't care. In early June 2020, out of the blue, social media, this is when Roger Rabbit, the drum major, came into our spaces. It's approximately one. My $1 billion fight against the shorts. Well, I'm from London, don't you know? And I'm traveling here and there, and we're going to get this done. And I have contracts. Companies have contracts. Once we're funded these contracts, we're going to be big. In early June 2020, out of the blue, social media pundits started, I never did, starting calling Genius Brands the next Disney. Yeah, more ways than one. But this wasn't your typical short squeeze like everyone thought. This was Kassam setting up his manipulative long short strategy by creating unsubstantiated rumors, according to our sources close to Anson. So it makes you wonder, who's paid to come into our spaces with a, hey, have you looked at GNUS? Hey, this stock is running. Who's paid? And who pays them? GNUS turned into the most popular stock added to Robinhood accounts during the first week of June. I saw it, and I was PO'd from the start. But it was so much emotion that it was hard to fight. But he took money away from our people that listen to me and others. Look, people can make their own decisions. What annoys me is I think he was pumping his own stock. He came in pretending to fight shorts just to get the money. That's my opinion. The move created the liquidity demographic required to cover Anson's and other associated short sellers' massive positions. Sounds like what I've been talking about all these months. Should have waited for this, and I never would have had to talk to you. When Genius stock was peaking above the $8 USD a share, many investors will recall that some anonymous pumpers on social media were speculating that Genius Brands cartoons would become more popular than Disney's. And penthouse soft porn would become valuable in the case of Vocal. On June 5, the peak of GNUS share price madness Hindenburg Research, Nate Anderson, entered the picture on cue. Hindenburg is a prominent short seller, and according to a lawsuit filed by Catalyst Capital, it has direct working relationships with Kassam's Anson funds. Nate Anderson, of course, has denied the allegations, but we know from multiple sources that he is directly associated with Anson funds. The pattern is clear to see without source confirmation. The days before the Hindenburg report on Genius was published, significant short positions were taken by Anson funds and or its associates. That's their fault. I'm not saying the CEO took short positions, but why did he do the deal? And why did he come promote? Why did he come? I listened to him. I knew what he was doing. And to the outside world, there is a perfect cover. In his report entitled, quote, "A Bag Holder's Guide to Why We Think Genius Brands Will Be a $1.50 stock Within a Month," unquote, Nate Anderson argues that Genius, Disney's social media postings included a bunch of falsehoods. Of course, they put them there. And I think the CEO, the best you can say about the CEO, he was believing his own spit. That's the best you could say about it. Nate Anderson even suggested that investigators dig deeper into a situation which Moez Kassam manufactured in the first place. Paren. It's important to note that Nate was paid by Anson funds for the report, something he did not disclose on this short report. Another violation, close paren. This guy doesn't know his punctuation rules, but I don't always get them right either. It is unlikely he was paid directly. It would have been through a third party as a consulting fee. The amount is believed to be in the excess of $300,000 USD to write these reports. White Diamond, Crappy Barra, but the SEC doesn't care. Do I have to point out Gary Gensler doesn't care? The timing of the release of the report was impeccable. It was also put together, complete with an ostensible investigation, in the matter of a few days. It's a crack research team over there. That sort of turnaround time, of course, is impossible. So it is clear that Nate Anderson was given vital facts of vetted information by an insider. In this case, Moez Kassam, or one of his close associates, Sonny Puri. Sonny Puri, a man named Sonny Puri. Is that Indian? Iranian? Could be Lebanese. I don't know. But there are more details of the Hindenburg report that are worth mentioning here. The report was premised on the knowledge that retail investors were completely oblivious to the fact that 131 million shares and share equivalents issued from GNUS's recent financing rounds would become available to trade within an estimated 2 to 4 weeks. And Anson funds directly and indirectly participated in these financing rounds or advised GNUS in these rounds. It's my $1 billion fight. I just wish people, how can people lie so boldly and not have a conscience? It's all these people. It's not just the CEO. I mean, it's sickening. What's happened in this world? And no, how can you trust the government or Wall Street? On June 5th, at the peak of Genius share price madness, oh, I already read that. They link. Please see the post to find out more on how Anson funds were even more dishonest here. Genius has generated losses every quarter for almost 10 straight years. It's my fight against the shorts. Dun, 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 dun. Dun, 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 dun. Be kind to your web-footed friends, for a duck may be somebody's mother. Despite this, the self-proclaimed street-savvy Anson Funds was Genius's biggest institutional investor and supporter for many years. People also need to ask themselves why on the 4th of June, one day before the Hindenburg report, a bag holder's guide to why we think Genius Brands will be a $1.50 stock within a month came out, Andrew Left of Citron Research, a good friend of Moez's and who has worked with Anson on multiple occasions to defraud investors and break companies, suddenly puts out a negative tweet on Genius Brands. Does this not seem strange? They link the tweet. It says, I don't know what it says. Does this not seem strange to people when his best buddy was apparently long the stock and a big supporter of what they do? After the Hindenburg report came out, Genius stock plummeted, causing Moez to panic because he likes the stairs down approach. They remember that story I tell you about the old bull and the young bull at the top of the hill, and they see about a bunch of cows. The young bull starts snorting and pawing the ground, and the old bull says, "Why are you in such a hurry? I want to go down there and, you know, belly the cow." And the old bull says, "Let's walk. We can kiss them all." And that's that stairs down approach. And you see it in all these stocks. They want you to buy so they can take that money out like a sponge, selling non-existent shares into existence that, do I need to say it? The SEC could care less about. It's not hard, Ann Wagner. It's not hard, Ann Wagner. If you allowed a consolidated audit trail to become a daily release, maybe every hour, but certainly by the end of the day, just like time and sales, this would stop in a heartbeat. Okay, so does this not seem strange when Anson Fund's best buddy, Andrew Left, was apparently long the stock and then put out that negative tweet? After the Hindenburg report came out, Genius stock plummeted, causing Moez to panic because he likes the stairs down approach, as it allows him to disguise his actions much more clearly. or much cleanly, sorry, disguise his actions much more cleanly. To do this, his team and people linked to Anson created the www.disneyguide.com website with the sole purpose of pumping the Genius stock to stop the slide and make it a more manageable descent. Our investigation has uncovered that the owner of the DisneyGuide.com domain is a used car salesman and realtor, from Minnesota by the name of Josh Flo. I can't figure that one out. Josh Flo? Just stopped in for the cup of coffee, friend. While the authorities are already likely looking into Josh Flo, I doubt it. They might be listening to Even Flow. What they will find is this: an individual who has little understanding of markets or markets rules. This individual does not appear to fully understand with whom he was working or the extent of the crime he was committing. That makes sense. He was most likely simply an instrument used by Moez and possibly someone whom he came into contact with through a close associate or during an Anson Fund's visit to Minnesota when they cut a deal with a company called C&H. They talked Flo into purchasing the domain and even convinced him to use his personal Twitter account, which he has since been closed. But they used his Twitter account to talk up the fake Disney news. They also convinced him to register an account on StockTwits to pump it further, along with another Twitter account registered to the DisneyGuide.com website. This is all sickening. It really is sickening. It's because Gary Gensler doesn't do his job. There's a failure of leadership at the very, very top. The SEC is owned by Vanguard, BlackRock, and Goldman Sachs. Flo started posting on the Twitter account on June 13, then he stopped on June 16. And here's pictures of it. If there were a regulator that cared, this would have been stopped. But there isn't one. So he posted, proudly presenting DisneyGuide.com. Check it out and let me know what you think. I just received a call from Genius Brands. They said they are putting together a frequently asked question page as things are coming in. The Fire TV app and the Android app still need to update. They don't have it on iOS yet, but they are actively developing it now. The CEO wasn't part of this bloody three-ring circus. There are going to be up days and down days. I never said Bulls were winning. I was just curious how you came to the conclusion that the Bears were winning on a green day. If everyone was green, we would all be millionaires. Josh Flo. There are going to be up days and down days. On his personal Twitter, Flo also suddenly shifted from tweets strictly related to real estate to Genius with zero explanation. On June 9, Flo suddenly posts something about a random oil stock to make it look like he is now interested in equities. And then on June 11, all attention shifts to Genius. June 11, Genius. Just wait for people to wake up and figure out this was pushed down on old news. Genius. 5 minutes until this gets back to normal. Genius. Someone has to sell at 199,999.999. Josh Flo, Realtor. The entire social media back and forth has Josh Flo talking to himself and commenting on his own posts on different platforms. Flo has not yet moved to delete his Twitter content, but we suspect that will follow soon when he realizes the amount of trouble he is in. Yeah, but that's assuming that the SEC gives a twit. A Toronto-based source close to Anson funds has told us that Josh Flo and the DisneyGuide.com website details are the one loose end that has Moez Kassam very concerned. Poor guy. Flo is intended to be the fall guy when the SEC comes knocking, but he is also the weakest link. If Flo believes Kassam will betray him, as Kassam has betrayed others, Flo may run to the authorities himself to avoid prosecution and turn himself into a whistleblower. Then we also have Flo's StockTwits account, in which a used car salesman and a real estate agent suddenly becomes oil guy. Oh, this is sickening. It's all the same copy that he posted on Twitter in June, and then it mysteriously disappeared on June 26. Fortunately, someone at ADVFN managed to copy the text. There it is. It's amazing that no one cares. Golden Cross, going long. Nice rumor find going long 30, 6, 11, 20. Is Disney pursuing Genius brands? Good Lord. We are hearing rumors. Oh my gosh. June 10, 2020, Disney. Rumors are coming in that Disney may be looking to acquire Genius brands. Although Bob Chapstick of Disney, and Andy Hayward of Genius Brands, who's Andy Hayward, haven't made any announcements, we are getting increases chatter of possible negotiations talk. Considering Andy has sold to Disney before, there may be some validity to these rumors. Come to DisneyGuide.com for all things Disney and updates on these rumors. It is our assessment that Josh Flo, a low-level real estate agent, is not in a position to quote-unquote hear rumors of this level. He was fed this information and hired to publish it as a fall guy. The Fly covered this. Breaking news, instant updates. GNUS, Disney-focused blog circulates Genius Brands rumor. Disney Guide, which is a blog that said it, quote, is in no way affiliated with the Walt Disney Company or its subsidiaries, unquote, published a report on its site that claims, quote, rumors are coming in that Disney may be looking to acquire Genius Brands, unquote. The Post adds that we, quote, we are getting increases, chatter of a possible negotiations talk, unquote. The Fly, in fulfilling its mission of explaining stock movement, often comes across the many unconfirmed rumors being passed through trading desks and social media platforms. On the occasion that rumors or speculations appear on the Fly news feed, it should be viewed not as giving credence to the conjecture, rather as simply highlighting its impact on the stock price of the companies involved. Genius was trading at 357 that day. $1.50. All right. When Josh Flow wrote this piece, Genius stock suddenly halted its downward trajectory and moved from 345 to 452. It traded hundreds of millions of shares and has never been that high since. Okay. It goes on for 15 more pages. I think I'll stop right there and go to questions, because I think you've listened long enough to this horror. It's just sheer horror. If my computer starts freezing, I'll turn. All right. I think I have to turn on my other little thing here in order to make sure that I can read your comments. Novak Djokovic beat Nadal today. It was a crisp set, and Nadal showed such fight and gumption. It was amazing. All right, let me go enter. Allow. I'm going to switch. I'm going to mute this mic. I hope that. Oh, I have to turn the volume on. I hope it doesn't echo. Okay, so this one here, you should be able to see. The other one will probably freeze. I'm going to see if this works. Do you think there was more than one shooter on the attempted assassination of Trump? Yes. Is that a trick question? Yes, I do. Yes, I do. You're a late bird tonight. Yeah. Hey, Mark, peace and happiness. Hey, cutie pie and a kitty cat, Celeste. Sounds like Ryan Kitty and Mr. Cohen, GME. Yeah, it sounds a lot like it, Robert. A lot like it. Incredibly like it. Scott Wallace. That's it. I forgot his name. Hamilton. Roger Hamilton. I agree. Colby Cormier. Checking in from Louisiana. I bet it's hot down there. I think it's hot down there. Hey, Barbara L., thanks for stopping in. Good night. Jerome Greenberg. If we're talking about Left, let's talk about his right-hand man. Who could it be? Somebody told me. Who is it? Tell me, Yucca Frida. Who's his right-hand man? Yeah, guys. I mean, I think it was. I also think he was so lucky he turned his head. And they're now trying to erase it from Google. But he was so lucky. So Yucca Frida, who is it that could be left working with the Left? I'm trying. There's somebody told me. I can't think of it, Yucca Frida. I'm sorry. Gigi has been bought. It is the only, or he's been promised things that seem legal, and he actually believes he's doing good work. Release the MMTLP blue sheets. Yes, yes, yes. Yes, yes, yes. Jerome, they might conclude with the corrupt DOJ that Andrew has left the building. Nothing to see here. I think Andrew's in trouble. If you see the picture of him online, that's a worried man. Hey, Barbara L. I agree, music is a very powerful drug. Can you play the beer barrel polka? Barbara, I'd love to hear you do the beer barrel polka. I used to make fun of Lawrence Welk, but I went through a period where I would listen to music. I can't remember if I was here or in London, but it was some late night radio. It might have been here, but it was all polka for about an hour or two. And at first I didn't like it, but once you get it, it's fun. Peace, love, happiness. Mose Anson is a criminal hedge fund man. Yeah. He's had years of unlawful activity. Canada ignores his activity, but the SEC charges him. I hope the DOJ gets the bastard. Let me see. No, he didn't answer. I want to hear from Yucca Frida, who's the guy working with him. I should be able to figure that out. I can be dim-witted sometimes. That's why I tell people to play music from Alzheimer patients' younger years. It helps them pull out old memories deep down. That's awesome idea. Music and smells. Doug C., I want to make all lost money in Logic. Is that possible? How much did you pay for it? I'm in Logic now. I invested. When will Logic go to $10 or more? I don't think it's going to go to $10. It could, but I don't think Logic is going to $10. I own Logic. And I think I bought Logic even just 2 years ago or so, 3 years ago. It's hard to remember, but I know that I bought Logic in the $7, $8, and $12 range when it was whaling. And I think I bought it in the $2.50, $3 range when it was on the Neo, but it might have been cheaper than that. But I took losses in those trades. And then I bought it, I don't know, in the dollar range, dollar something range. I took losses on those trades. More recently, I paid roughly 35 cents, and then I added to my position at ever lower and really low levels. But it's not going to $10, Doug. Let me see if I can explain to you where I think it's going to go. I mean, it could go to $10 in 2 years, 3 years. But let me see if I can try to explain where I think logic is going. I'm just not sure you're a real person, but maybe other people here will have that same question. And if I have the news story here, I'll show it to you. I do. So, Doug, Logic signed a letter of intent to acquire a privately held biotech company in May of 2024. Let's see, let me get the exact date. Thursday, July 25, Logic finalized the acquisition, which it announced. They finalized it. Now, what they didn't put in there is the final calculation of shares. So you read it, and my projections on Logic over time have constantly had to be lowered, probably because of shorting's effect, but certainly because of the absolutely disastrous Aubrey Advisors de-SPAC. But now they have 277 million shares outstanding. If we call it 300 million, which is what's authorized, and they get 15%, we do, of NewCo, which is the same co. It's Logic, but it's going to have a new name. It's like Nixie or something. So we get 15% of it, and the valuation is equal to $100 million. It's really simple arithmetic. 15% of X is equal to 300 million shares. You just have to solve for X. So we'll do that. That means there would be, let me just finish this before, and then that's worth, okay, 100 million. Yeah, that's worth 5 cents a share. So this deal, which has a valuation of 100 million, is worth 5 cents a share. We have 300 million shares, which is 15% of 2 billion. 100 million divided by 2 billion is 5 cents a share. The stock is what, 2 cents? I didn't look at the close. I don't. Anyway, it's roughly 2 cents, 2.5 cents a share. Okay, now, Doug, if you read the news stories, the one from 2 months ago and the most recent, I'll go with the most recent because that's the most up-to-date information. So this is valued at 100 million. It marks a significant milestone for Logic as it diversifies into biotech. The preliminary target valuation is 100 million, with Logic shareholders poised to retain 15% post-transaction. I can tell you don't want to be poised much longer. Anyway, they're going to uplist. Now listen to this. This acquisition represents the first in a series of acquisitions targeting a cumulative value exceeding $750 million, focusing on biotech and cell and gene therapy assets. Okay, so they're going to uplist by Q1. Now listen to this, Doug. On page 3. Additional accretive acquisitions, targeting 6 additional, not just Medtronics, targeting 6 additional strategic acquisitions, which are in process now and will provide a path to significant revenues by next year, a year from now. It's going to be cell-based therapies, cancers, age-related diseases, stem cells, viruses, therapeutic components, I don't know, not, etc. Longevity, anti-aging, rejuvenation. There's a bunch of crap words in here, like they're going to transform the landscape of health. Well, hopefully. They specialize in pioneering medical solutions within the realms of drug development, medical devices, and rare disease modalities. Their mission is to discover, manage, and support companies which share the vision of advancing health through cutting technology and research. Kamala Harris could write that. Okay, so they list a bunch of the diseases and supports. I don't want to spend forever on here. Their areas are longevity, cell and gene therapy, collaborations, and other investments. All right, this, Doug C., this transaction is going to be completed August 15th. They're working on 6 additional. So August 15th is 2.5 weeks away. This is the first of 6 biotech-focused company with subsequent acquisitions already in the letter of intent phase. All right, so let me just do one more calculation for you, Doug C. Based on the press release, they're going to do 6 acquisitions. I hope they do them all at the same time, but it might not happen that way. But based on the press release I just read to you, the value is going to be in excess of 750 million. So let's just use 750 million. But it says in there it's going to be in excess of 750 million. We're going to have presumably 15% of that. And there's currently 277 million shares issued and outstanding, but authorized is 300 million. So let's use 300 million. So the value, probably we'll know more about the other acquisitions during August, but I would say September. The value is greater than 750 million. We retain 15%. We own, let's say 300 million. That's the total amount authorized. So 300 million is 15% of what? Let's calculate it. We already know what it is. It's 2 billion. But, so let me write that down. It's 2 billion. If they do them all at the same time, and I'm not saying they will, Doug, I don't know. But if they do the calculation of the value all at the same time, rather than it ever gets smaller like a Russian dolls, if they do one deal right after the other. But we don't have control over that. But if we just assume they do them all at the same time, you take 750 million and you divide it by 2 billion shares outstanding. That's 37.5 cents a share. 37.5 cents a share, which is lower than my 45 cents because, or 44 cents, I forgot what it was, because it's more shares outstanding, and I'm taking, instead of using the actual outstanding, I'm using 300 million. Okay, so that's what I think the stock is going to be worth as they announce these next. I hope they announce all 6 deals all at once. But over the next period of time, I'd say over the third quarter, this all gets done. I don't know it for sure. So it's 37.5 cents per share at 750 million. That is for these 6 deals. They're going to continue to grow. And if you can assume that they're going to double over the next months their acquisitions, they have tremendous deal flow. And now I'm going to talk about upside. I'm going to stop being conservative. I'll still try to be conservative. But let's say they go to 1.5 billion in valuation. I think the stock has a target of 75 cents a share over the next period of time. I don't know if it's 90 days or takes 6 months, but some time frame like that. As they bring in these other companies and keep growing, and it's visible, that would be my target. Now, let's go with one. Let's go with one other positive, which helps the shorts, unfortunately. We all voted on a 1-for-50 reverse stock split. So if I'm correct about a 75-cent target, I think Logic next year could conceivably, now there's the stock market, there's a lot of risk, but it could conceivably be a $37 stock on the New York Stock Exchange with cash flows, multiple therapies, visible growth, research, and institutions as investors. It's going to be hard for the shorts to short that stock. It could be bigger than $1.5 billion, but that's my bullish case. What are the risks, Doug? One more bullish thing. There is a large short position. So as the covering comes in, the stock could go higher than 75 cents or 40 cents, whichever one you pick. Maybe it goes to $1 or $1.20. I would argue those are times to sell the stock if that happens. But I don't think it's going to $10. And I never said that, ever. It's a trade. It's trading at let's call it 2.5 cents. If it goes to, instead of 40 cents, 37.5 cents, it just goes to 25 cents. It's 10 times your money. Chop that in half. Just get out earlier. 5 times your money. You know what? Just get out at 10. It's 4 times your money. That's how I see Logic. What are the risks? The risks are that they do a bad deal with somebody like Aubrey Advisors sponsoring it. I don't see that happening. But it's always a risk with these CEOs. But I think he really knows what he's doing now. He's been in the trenches. I don't think that'll happen. Although he's going to be resigning as CEO, I think he'll be very close on the advisory of the company. I think also the other risk is that if they drag out all the LOIs and the roll-ups of these companies happen over a long period of time, you could conceive of a time where the stock price is under attack and we get diluted just by time. I don't think that's going to happen either, but those are a couple of the risks. There is the macro risk, Doug. I see the stock market going up 50% from here. You know, it might be less than that. It might be 30%. But I see the stock market going up 50% from here. It could happen in a month. It could happen in 3 months. I don't know. But I think there's going to be such a flood of liquidity. There's going to be such a fear of missing out. I think interest rates, which I'm changing my mind on, the trend is going to bring them down. And I really think we're in the last violent stages of a 44-year bull market. And the upside is going to rip your pants off. And it's going to be very quick. You've never seen anything like it. You saw it in NVIDIA. You saw it in the stock bomb bubble. But anyway, I think that's coming. After that, I think it's going to be a really hard landing for the stock market. My prediction, and it's something I predicted at the bottom line about, I'd say 15 years ago, and people all looked at me like I had three heads. It was more of a question I asked. But I think the Dow and all the indexes are going to round trip. Question is, does the Dow go back to 1,000 or 2,000? I don't know, but I think the Dow could be down 90%. Now, what happens in that environment? Initially, all stocks might be sold, but then as my bosses, my managers, my trainers used to teach me, which I never really got the chance of seeing. I lived through the 87 bear market, 2000 and the 2000 bear market, but nobody in the market since the early 80s has truly dealt with a secular bear market, in my judgment. We're going into a generational bear market. Now, there's still stocks that are going to make money. That's why the SEC is going after CEOs. Over-the-counter stocks did brilliantly in the 70s and the early 80s. So it becomes a market of stocks, not a stock market. So anyway, and healthcare is not going away. So I think logic at $1.5 billion, assuming they make no mistakes and assuming that they do the share issuance at 2 billion shares total for all 6 companies, or let me say it differently, they do 2 billion shares for a greater than $750 million valuation, and they don't have to issue anymore to get to $1.5 billion valuation. That works out to $37.50 a share, adjusting for the 1-for-50 stock split. The risks to that analysis are that a CEO says, I don't like the amount of shares I'm getting because the shorts have the stock price suppressed. And then it becomes a matter of salesmanship and negotiation. But I think it's in the best interest of all CEOs on the first 6 to come in at the same time because it gives them the maximum ownership. Because if you issue shares sequentially, instead of 2 billion, you might end up at, I don't know, 2.5 billion or worse. I'm not smart enough to figure out the computer models. Anyway, it could be a $30 stock on the New York Stock Exchange with massive revenue projections, institutional ownership. It could be quite a success story. But Doug, I don't think it's going to $10. I think it could go to $1 or maybe $2 if you had a miniature squeeze. But if you had something like that, I would say you should sell and wait for the stock to settle back. Where do I think realistically the stock, you could maybe just going back to being conservative? I think it has a target of 40 cents, 80 cents, even a little bit more if everything goes right. So where would I think you should be targeting a trade? 25 cents as a trade. If you read the press releases and it gives you great encouragement and reason to wait for a year, I might tell you to go ahead and wait, and maybe we can get to $1 or more within 12 to 18 months. And that might be worth the wait. But as a trade, you're paying 2.5 cents. I think it can get to 20 cents. I think it can get to 40 cents. But anyway, I've given enough of my thinking on that, I think, Doug. Let me go down and find out if that guy told me who the partner, Yuka Preet said, let's talk about his right-hand man. I can't remember who his right-hand man is. Hi, Ellie. Ellie Belly. Uh, they are, by the way, Ellie Belly, my niece named Ellie Belly. She just got accepted to the Naval Academy. She's going to be a freshman or whatever that's called in the Navy at the U.S. Naval Academy. I don't think she'd appreciate being called Ellie Belly anymore, but that's how I think about it. But congratulations to her. What an amazing thing. Yeah, they're getting tough on the short sellers, but they'll probably take a couple out and put them in the desert and let the rest go on with it. Yeah, I think that's right. It's going to be an achievement before. Um, I don't think it's trading at $5 now. Maybe it is. But to answer that question, um, hey, busy. To answer that question, I don't know. What did I do bad? Oh, a good and a bad. Frick and frack. Dumb and dumberer. Um, but to answer your question, I like that stock. I don't have a lot of thoughts on it right now, but I can get my thoughts organized. But I think it's very similar, Mark, to Northwest Bio. My opinion, some big company is going to buy them out, and it's not going to matter that the shorts have destroyed the price. I think the CEO's done some bad financings, but as we've learned now, it's not always because the CEO is part of it. Where do they go? They need to raise money. They've got to keep the machines on, the revenue going. It's tough when you have an SEC that doesn't even enforce settlement. It's almost like you have a government that doesn't enforce fair elections. What did Mark say? I read my horoscope. A beautiful woman. Wow, you're so smooth, Yucca Frida. You're smooth. You must be Leo. Wow, Tesla, 6 trillion. I like Tesla very much for its battery technology and some of the other things he's going into. I think his idea on X, he's become, even though he put a Facebook woman or a I don't know where she was from, maybe one of the other Google woman in charge. I think that he's created a fair public square with X. And if he can integrate payment systems and his other dreams with cars and satellites and data, uh, I think Tesla can be huge. The key is energy and his ideas on energy. Um, if he can come up with a solution of storing the energy the sun gives to the earth during a day in a way that it can be used powerfully across all sorts of machines and uses, Tesla's going to be ginormous. And I know I'm leaving something out that he's starting on. It's more than just AI. Um, but yeah, I think Tesla is going to be a great stock. But I don't know that it'll ever get to 6 trillion unless the dollar collapses. We're living in a world where PE ratios are priced for perfection. They're not even priced for perfection. They're priced as if this time is different. And I think we're going back to much lower price to earnings ratios. Tesla has all this upside that you can't define, so maybe it'll be worth it. But I think in a correction, they'll short the hell out of his stock, and I hope he hasn't over leveraged and is not exposed to debt, because the stock can lose a lot of value in a straight down sell off. But Mark, I think Tesla will be a survivor, particularly if he comes up with a way to store energy in a exchangeable battery inexpensively. I think the thing I'm forgetting is his new solar power idea. Um, and he's got a new engine. If his new engine is designed like the Toyota ammonia, Toyota's created a combustion engine based on ammonia. Well, our oceans, as windmills spin out in our oceans creating electricity, you can use the excess electricity, I think it's called electrolysis, and you can separate seawater into ammonia and water. The waste product is water. The ammonia burns in a combustion engine with essentially the same power as oil, gasoline, but it has much fewer of the negative uh, emissions. To my memory, I'm not a chemist, but water drips out the back, and I don't think there's any carbon created as ammonia burns. But I'd have to look up the chemical formula for ammonia. But Toyota's created this car engine, and I think they're onto something. And if Tesla's also, his new engine is something like that, ammonia could probably, Trump talks about how do you get a truck, a lorry from Detroit to Monterey with electric. You can't do it. You can fill up a diesel tank and get the whole way without stopping. Ammonia might be the answer. So if Tesla's in that area, I think he could be one of the biggies later on. 6 trillion. Let me just put it this way, Mark. It's not going to go straight up. And I think the downs could be violent in such a way that if it goes down while he's over leveraged, it could be tough. Robots, true. Robots, true. I like CVM, by the way. I like CVM. If I started talking about it, I'd be pulling ideas out of my netherworld or my memory. But bottom line, I think it's a lot like Northwest Bio. It's been shorted, and it's got a great product. And someday, two big medical companies will get in a bidding war for it, and it could be soon. Finger will not be bargain stock much longer. I agree, but I don't know what you mean by much longer. Uh, I reiterate, I think these prices down here are great. If you're willing to wait, in the worst case, I think it doubles, maybe even triples from here, just on the company's execution of its various business ideas, two of which have repeating revenues but low margins, three of which, well, I guess two of which really, but there's three heads to those two, potentially can bring really high margins and growth from now um, uh, until 2050. So anyway, I think the stock, just based on that, I think the stock goes much higher. I think for me, the stock goes higher in September. Of course, between now and then, the positive triggers, which could surprise the market, is what if they announce another contract that's big? What if they start tracking a little, they give us more information on this current contract so we start understanding it? But what if they meet with this institutional investment bank in New York this week or during August, and they put out a buy recommendation to their sales force? I don't know. That could have a material change in the price. Those aren't dead flowers. Those are real. Those are real flowers, Donna. You want to see them? I don't want to kill them, but they're real. Alternative asset manager. He's just a crook. Nunez inside, Mr. Peabody, Sherman, and Bullwinkle. You're getting another cataract on Wednesday? You could read license plates? So, Barbara, you did it for distance. You did it for distance. And what were you doing driving when you couldn't read license plates? I hope you didn't drive at night. He needs the other one done now. I need my brain corrected. What is the URL for market frauds report? Oh, good point. I didn't finish it because I thought it was going on too long. Thank you for that question. I wanted to see who wrote it. So let me look at the end of the article. It doesn't give the name of the writer. But I'll hold this up. I'll hold it up so you can read it. I'll do it with the front page. Here's the front page. And this is so weird. All right, I'll try to type it, Steve. I'll try to type it. I'll try to type it. Of course, I can barely read it. All right, so it's HTTP HTTPS oop boom boom market frauds dot to / Andrew dash left dash Anson dash funds / Let me make sure that's right. HTTPS market funds.to Okay. There you go, Steve. That is what it is. And what it is too. And what it is too. Robot taxi could be big, but if you're going to build a position in Tesla, I think you can trade Tesla up in this run, and it's had a pullback. And my guess is all these technology stocks are going to have another run back up. But if I'm telling you, if the market does do what I say it's going to do, and it's going to go up 25, 30, 40, 50%, at least start buying puts on the way up, long term, like 6-month puts. I think it is bigger than he. I think it's bigger. I agree. I think today's and maybe the rest of the week's massive shorting might be the last of the ridiculous levels. I happen to agree with you because I tried to give you all, and I'm not going to go into it long-windedly now, but before the video yesterday, I talked about my view that the market was going to go up. And then I found out that the microphone wasn't working, which was swell. But then I heard also that Richard Hoffman had the same problem. So I wonder if it was a problem with Chrome or with the server, because he uses the same. I copied him. He didn't copy me. I did an interview with him, and I said, "Oh, you use StreamYard? I'll use StreamYard." My projection, based on many sources, I think the S&P could go to 7,000, NASDAQ to 25,000 or more, the Dow to 60,000, and the Russell to 3,500. Now, that doesn't mean hang on for the very tippy top. That means if you can establish a position, and I would love to know how to trade the Russell as an index, how to buy calls on it. I saw there's a way to do a mini commodity futures on it, but I don't have a futures account. But I think you could buy just a handful of calls and potentially just get outsized returns in a very quick period of time. And my goal for you, and I don't think I'll be able to do it, would be able to take those profits and put it into silver, platinum, gold, or miners, or copper miners. we're going to go into a future where the supply chains of the Bill Clinton era and onward, and treating China like a developing country and all that, it's going to change. Um, we're going to bring production back to the United States. If Trump gets in, if Kamala Harris gets in, the corporate income tax is probably going back to 35%. So capital stay out of the country. So we don't know yet what's going to happen. But all I know is the bull market we're in, it's going to be over. And I think we're going to go to value stocks, smaller cap stocks, uh, 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 commodities. It's not going to be just the technology, 5 or 6 technology companies. And look at somebody asked, am I ever right? Look at what happened to Costco's stock price. Since a while ago, I was talking about it, you know? So there you go. Anson pays $3 million and he takes $100 million out. That's cheaper than buying a house. I agree with that, but unfortunately I think this train wreck of an administration is going to continue. I answered that question. All right, so let me see if there's any new questions. Let me see if I can go to the top up here. I'll go through some of these quickly. Hey, flying bus driver. I hope I didn't put you to sleep on your flight across the ocean. Ed, I just did a long thing on Logic, but to answer your question quickly, I think Logic is looking great. I know it's been a wait. Personally, I'm glad they haven't calculated the exact number of shares yet, because I hope they bring several of these roll-ups in at the same time. My own opinion, if I didn't give it away, is I think the valuation of the deals they're bringing in are going to be over $1 billion. The press release says over 750 million, so you should go by that. I think the stock is worth 40 cents, 80 cents, but probably more than those two numbers. It's 2.5 cents. I like it as a trade because they by August 15th, the one deal is going to be finished. Even if that one's the only one that's done, it's worth 5 cents a share. Do the shorts short it? I guess they could. They could keep doing it. But I think it's going to be exceedingly difficult to naked short a stock which has revenue and earnings and growth. But my optimism is in the press release. They're talking about 6 deals that are under the LOI stage that are worth more than 750 million. They're working on them all now. The first one closes August 15th, so maybe we'll have some more color on the remainder. But they also talk about how the power of the earnings and revenue for a year from now. Yeah, Logic is looking very good to me. They raised some money, obviously, because they expanded the number of shares. So I think they have enough money to get through the third quarter in terms of reporting. But I also think they have an incentive to get these deals done. And each new CEO that comes on, they're negotiating with at the same time. I think it's in the incentive of all of them to work quickly. It certainly behooves the early CEOs to convince the new CEOs to do it all at the same time rather than in an ever sort of decreasing waterfall. But anyway, it looks good to me. Yeah, Andrew left. Tennessee. Moez is Persian. Makes sense. So he's Iranian. Persian. Persia used to be a pretty big empire. Hi, Susan. Hey, David. I have no information on that. It's happening apparently because it's on the calendar of that brokerage firm. Um, it doesn't look like it's happening in July, so it's probably in August. But David, my brain and my heart tells me September for all of this stuff. September. August is a hot period. Brokers who make a lot of money go on vacation. Institutional brokers, most of them go on vacation for a little while. Bankers go to the Hamptons. Top flight people at brokerage firms take a lot of time off. And then clients, the big clients, the big investors, they go to the Mediterranean, they go to the Caribbean. I don't know about the Caribbean, but they go on these yachts and they go to the beaches and they go to all sorts of places all over the globe. I think August is just dead, 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 dead. So anyway, as far as I know, that meeting is still happening. It's still on. If it happens in August, personally, even if they were favorably uh, convinced to do something, like put out a report, get their desks buying it, I would say September. It's a guess. Yeah, it's tough. I don't think there's any incentive, Mark, to stop this. I think it's the whole market, and the more I allow my brain to accept the truth of that, I think if they fixed it all at once, you would see the Dow go to 500. If it could go under zero, if they fixed it all at once, the Dow would go under zero. Our markets are a house of cards based on lending out stock that doesn't exist, booking profits and earnings on settlements that never occurred, and uh, putting in customers' account pretend shares which dwarf the amount of real shares that are out there. They can't fix it. They cannot fix it. Kenny Boy's a protected class. Pete, sorry, Patrick Byrne used to say, apparently, he never said it to me. I've never talked to him. Although, no, I asked him a question. I was embarrassed later because I think I know what I did. I don't want to repeat it. Uh, and I tried through channels to say that I got caught um, sort of unintentionally saying something that wasn't true, and I wanted him to know I didn't mean it that way. Anyway, I don't think he remembers me at all. Um, anyway, Patrick Burns used to say that Citadel was the Fed. I think Ken Griffin is a protected class. He's there to forward the Fed's agenda, which is the bank's agenda. I think now is a great time to buy Finger. Um, but, add to positions. What's going on Finger? These won't give out numbers on Finger, and why do I think that is? Well, we're all tired of trying to predict. It's very hard to make predictions, but there's no price discovery anymore in the stock market. My own view on Finger is they have it under control. Ham thinks there's 230 million or some odd amount of shares short. There's no way to know that for sure. I think it's big, but that's where the criminals get away. If you want proof, you can't know it. But I also think you have to follow your information that we've learned 3 times now. Finger ran to 17, it ran to 9. Last year it ran to 8. And I think they have it under control. So if you're asking why he's not putting out projections, that might be one reason. I will repeat, Jeff, that I think buying the stock at $2, if you're willing to wait, it's a $4 stock, a $5 stock, a $6 stock all day long. That's nice, even if it takes 2 years. That's really nice. But when I say that, I'm not capping it there. I'm not capping it there. I just think in your brain, just to stop all the anxiety, to stop all of the anxiousness, if you believe in the story of Finger and you keep up with it and you believe in the CEO, you establish your position. You don't know when it's going to run. You don't know. The GME run that happened, 3 months ago? Those people were in it for 3 years. And then all of a sudden they're geniuses. And this guy comes on and says, chill. They didn't pick when it would happen. I think the guy that came on was a signal to let the stock run up so he could do a stock offering. That was a communication. Clever. Anyway. Now you say won't give out numbers. I don't know what other numbers you're looking for. I will continue to tell you that I think in Finger Motion's third quarter, you're going to start to get an understanding of at least 1 or 2 of these business models they're in, how the future growth is going to come in terms of revenue, cash flows, and earnings. Their third quarter is sort of our fourth quarter. But that's the beginning. It could be their fourth quarter. Everything seems to stretch out, so it could take longer. But I think once Finger Motion is able to predict or forecast revenues, growth, earnings, all of that, and have analysts do it, this is a big step forward. And I think if institutions start buying into 1 or 2 of their business revenue streams, That's also big. I think as they move to higher margin, that's big. If they can grow without adding to costs, which I think is right, that's big. But until then, there's some skepticism about can they get the earnings and revenue growing as quickly as people need. Jeff, it's my opinion that the stock has been like a moon circles, like a asteroid circles the sun on a wide and oblong orbit. I think Finger has been circling sort of $2, $3 range for so long. It runs up like it goes out to the edge of the solar system, but then it comes back and hugs the sun tightly. I think the sun has been around the $2 or $3 range forever. And so when wide swings go out to the edge of the solar system, the selling pressure is able to get the orbit back to $2 over and over and over again. At least 3 times that I've seen. I'm talking about big moves, they get it back. Well, we know that now. Now, the guy from the American Stock Exchange says no, there's systems in place. FINRA numbers are wrong. They don't show the buybacks. The company doesn't have much revenue, doesn't have much of a business plan. They've done private placements, and you don't see the delivery of the shares. That's one argument, but I don't see the buyback of the shorts either. So, Jeff, unlike other companies like Genius, Vocal, KNW, GTII, and I could list 6 or 7, 8 of them. I just can't think quickly enough. Unlike all of those, Jeff, you have a CEO in Finger Motion who is not going to do a Roger Rabbit and issue a senior secured convertible note with warrants convertible into a toxic formula. Now, you know the manipulations in the stock. Could it be real? I don't know. But what's happening now presents a buying opportunity if you believe the forward projection of earnings. If you don't, I don't know. I don't know what to say. I would not buy Finger as a squeeze play. I would buy Finger as a stock fundamentally that could go from $2 to $3 to $4 to $5 to $6 to $7, $8. Based on incredibly good news coming and coverage. I would add to it, if you're looking for a squeeze, that in my sort of pitiful example of an asteroid orbiting the sun, and it goes all the way beyond Pluto and then comes back and hugs the sun tightly. Stupid thing. I think it's just incredible, this computer system I have. I think as fundamentals come in, as maybe a research company comes in, as this contract, which I personally think is a massive quantum leap into the future. I could be wrong. as other contracts come in. I think the comet or the asteroid that is circling the sun in this wide orbit that sometimes goes to 9, sometimes goes to 15, but always comes back to 1 or 2 where the sun sits. I think the sun might shift. The sun might have change in location. Maybe the Andromeda galaxy collides with ours, and the sun may move out to $5 or $7 or $6. And as the comet or the asteroid starts swinging out to the edge of the solar system, it'll start going out to $20 and $25. But as if they're able to bring it back, the orbit, and it hugs the sun tightly, it might be around $5 instead of $2. Might be around $7 instead of $2. If that starts to happen, in my opinion, and if there are massive 200 million shares not borrowed, not received, not located, not settled, the prime brokers aren't going to carry a position that comes in orbits around $7 and then goes out higher to 25 and 30, the edge of the solar system, but it comes back on the downturns and hugs the sun tightly at $7, instead of in all these other cases, they sometimes get it to hug the sun tightly at 2, and it expands down to 1. The prime brokers are going to say, no, we need more money. And that's when you might see a squeeze. That's when you might see a buy. When that happens, I'm tired of predicting. I believe the shorts have that broad orbit under control. The only thing that can make it do a shift is revenues, predictable, cash flow, predictable and repeatable, earnings, predictable and repeatable and growing. And then you shift the sun from $1 to $2 to maybe $5 to $7. And then maybe it shifts to $15 to $20. Anyway, I don't know. That's probably a bad analogy, but it's all I can think of. And I just don't think you should be looking for numbers anymore. I wouldn't sell calls against your position, because if Ham's right, you could get a surprise out of left field and the stock could go to 20. But Jeff, Finger went to 17 and they were able to bring it down. Finger went to 9 and they got 3 guys, COSM, a couple of other guys, maybe innocently, and some sort of front to work with Alpine and to bail out the Kramers. I watched it. They sold 100 million shares according to FINRA. You can't follow that. That's not the right data. Well, it's what FINRA reports. So excuse me for relying on FINRA data. Well, there's systems. You're not seeing it. Well, so you're telling me there's other data? Why isn't it reported? Well, it's there. Well, you don't know it's there. Well, it's there because they've got to be covering it. They've got to be. How do you know that? I'd rather just go with the data that's published and I'm told is from FINRA, by FINRA. It's on the FINRA website. They shorted when we were distracted by COSM. They sold down Finger because panic set in, just like they wanted as the stock prices went down. Finger, they shorted 100 million shares of Finger Motion in 10 trading days. I saw it. I have it. I took a picture of it. So the stock went to 17, they sold it off. They brought it down almost to 1. The stock went to 9, they brought it down almost to 1. The stock recently, last year, went to 7 or 8. They're trying to get it back down to 1. I don't think Finger's going to have the squeeze that I used to think was going to happen based on the information we have now. They've shown that they have it under control. That's just my opinion. Something has to happen that is a complete surprise. That could be an earning, that could be another contract. That could be a big, big contract that doesn't come across to you when you read it. Well, I don't understand this contract. If it's so good, why is the stock down? And it's only 2 vehicles. They were told this is a good contract, but it can't be any good because it's only 2 vehicles. And even though the contract says that it's for all vehicles, they only talk about 2, and the stock's down, so it can't be good. That's human thinking. That's human thinking. And it may be reasonable. It may totally be reasonable. But what if they came out with a contract? I can't think of what it is. But let's say they came out with a contract that's more specific. We have been engaged by the National Guard of China to install monitoring sites that will interpret the cellular data and other data that the telecoms have to track threats to our borders from Tibet, Kazakhstan, I don't know if Uzbekistan borders it, Mongolia, Russia, Japan, Korea, Vietnam, Cambodia, maybe something like that. I don't know. I'm making it up. And the government has agreed to pay us $100 million over 5 years, or $500 million over 5 years in US dollars. I don't know. I'm making it up. But if a contract came out of the blue that was specific and big, and they announced the value of it, and you went into your calculator and divided it by 52 million shares extant, suddenly the stock moves. That would be the shock. That moves the sun from $1.50 to $20, and then the orbit might come down to $15, but it might go all the way up to $100 or $125, and that's the kind of thing that could scare the prime brokers. Sorry if my analogy sucks. These aren't fake, Barbara. These are real. These are as real as shares of GTI in your account. Some of them. One out of every 30 shares of GTII in your account look like this. Hey, Frank. Gary Gensler's totally paid up. Yeah, guys, please do not trade GTII as it's in this expert market. If the company files its financials and it comes out of the expert market where you can see a bid and the ask, okay. The only thing you might consider doing, if you want to, I do not recommend it, is if you want to buy shares as a long-term dollar cost averaging. But Donna, if the ask in GTII behind the screens is something like that, which it very well might be, you could go in and put in an order to buy you could put an order in to buy 1 million shares at 2 cents. It could go up. And look, if you're doing that as a strategy to add to your position because you think things could work out with all the help that everybody's putting in and the hard work people are putting in, yeah, you could do that. But let me just show you what's more likely to happen. In order for them to, now this may still make sense, by the way, for you, but probably in order for them to exercise your bid at 2 cents, the ask, and you won't be able to see this because it's all behind the curtain. This is all unsolicited. They don't have to tell you. But in reality, that ask will probably come down to 0.005. My point is they're not going to fill your, all things being equal, they're not going to fill your order unless the ask drops at or below the 2 cents. But the problem is they're not obligated to put out the bid and the ask. So there's no obligation to fill your order properly either. It is all set up to hide action. Now, it is possible that if Alpine is trying to move shares or if one of the hedge funds just wants to get out and you have a bid in between the bid and the ask and you're sitting there trying to buy 1 million shares at 2 cents and someone just says, I want to close this position. They might come in and hit the bid, so to speak. But it's such a shell game. They would be selling fake shares to you. They'd be moving things around. I just think it's really risky, and you don't know how to trade. You can't trade it. If you bought it at 2 cents, you couldn't sell it at 9 cents. The only way you'd sell it at 9 cents is if the bid started running up to 20 cents or something. You have all the disadvantages. You have no way of making a smart trade in GTII unless you're just trying to accumulate for some reason. Personally, I'd rather own Logic. I'd rather own Finger. I'd rather own the Van Eck Gold Trust I was talking about. I'd rather own mining shares. For now, you'll have plenty of time to get into GTII, I think. I knew you. They're not trading it. GTII is dead. They won. They won. However, if the lawsuit is voluntarily retracted because all parties work out a reasonable solution, there is a possibility that everyone signs releases and walks away from this with an LLC, company, GTI, with its shareholders intact and with a massive short position. Maybe. Well, no one knows the size of it, but there's evidence that it's large in court filings. That's one. Two, they go through with the receivership. Is it possible during the receivership that the judge listens to the equity class and somehow allows equity to survive and allows the large naked short position to survive through receivership court? I don't know. I'm not a lawyer. Personally, I don't see the distinction from that, of that, with bankruptcy, which is the third option. They go through bankruptcy. I don't see any way in heck that the short position remains as a threat to the company. And I don't see any way that the company exits with the shareholders owning anything in bankruptcy. It's possible. They did it in BBBY. But I don't see a whole lot of way forward for GTII as long as David Reichman is fighting. I've been saying that since approximately July and August, and somebody on here says I'm covering my ass. Well, whatever. I'm tired of defending myself. I'm not going to read all. Oh, Chuck E. Cheese. Everybody likes cheese. It went to $2,200. Which one? Oh, I didn't know that. Sherman and Mr. Peabody. I have no idea what the Wayback Machine is. I used to miss a lot of references. I've gone through all the questions, I think. Let me go to the bottom. Hey, Mark, I'm at work right now. But